Hey guys, how are you? Hope you're all doing well today. Welcome back to Mark's Stock Review. This video is going to be on FuboTV. I'll be discussing their space and their specific niche, some reasons why investors ought to be optimistic about this company, some potential roadblocks, and a final take and price target. And as always, I keep my videos short and sweet, to the point, to respect your time. So if you do find this video helpful, please don't hesitate to subscribe and hit the bell notification. I greatly appreciate it. That said, let's get right into it. And full disclosure, I do not currently own shares of Fubo. However, after doing research for this video, it is now high on my watch list. Listed here are my recent trades of Apple and Carnival. Cost basis is provided for your reference. Headquartered in New York, they operate a live streaming platform with tens of thousands of live sports, events, news, and entertainment across Europe and the United States. Fubo is nicely positioned in a space where TV ad dollars is shifting to connected devices, and sports is really the driving force. Their goal is to provide all the sports people need on one platform with a great experience. They are targeting a very specific user base and making sports part of the basic packages instead of add-ons. And so moving on, reason number one to be optimistic on FuboTV is that they are attracting investor attention, however, still flying under the radar, relatively speaking. It starts all the way back to last year when they were named Forbes' next billion-dollar startup. And then this week, FuboTV finally got some buy ratings, and the share price really took off with that news. All the recommendations that I were able to find were all positive. However, it looks like the analysts have not all been introduced to this company, so it looks like they are still flying under the radar. And next week, their management is meeting with investors one-on-one, which could spark a catalyst. Reason number two to be optimistic is the potential for further sports betting integration. Per their CEO, quote unquote, we think we can enhance the viewing experience with wagering. However, he did say that they don't have a clear strategy as of yet, so investors do need to be mindful of that. However, in the meantime, there's quote unquote constant interest from parties in the sports betting space, which could serve as a major catalyst at some point in the near future. Third reason to be optimistic for FuboTV is the constant tailwind provided by the cord cutters. There's numerous stats out there, but the one that I'm going to show you is that by 2024, another 15.4 million households will cut the cord. Yet again, another constant tailwind for Fubo. Reason number four is their finances and subs are improving. Here we have a healthy growth of subs, which are still in the infancy phase. Next, we have the ACM, which is important because it measures the variable cost against the subscriber revenue. Turned positive in Q2 2020 from a negative in Q2 2019, and I expect that to increase when the Q3 results come out shortly. Furthermore, with the return of sports, they now expect to end the current quarter with 370 to 380,000 subscribers, a 28% increase year over year. And now revenues, 50 to 54 million, a 38% increase year over year. And I expect adjustments to continue to be made as sports return. And to be fair, I wanted to present at least a couple roadblocks, which in my opinion do not affect the overall growth story, however, could cause some increased volatility down the road. And that being the combination of the fact that it takes a lot of money for licensing and aggregating sports content, coupled with the fact that they are still not profitable. My price target for adding shares or initiating a position is anywhere from $9 to $12 if there's weakness after earnings. My final take is that their proprietary tech and being the first virtual MVPD to stream in 4K will make a difference. And on a side note, this will be the first time that I upload in 4K, so let me know if you think it made a difference. And my last final thought is I believe investing in Fubo may be a cheaper way for investors to invest in a streaming video service as opposed to some of the more expensive companies like Netflix and Roku. And that does it for the video. As promised, short and sweet and to the point. If you guys found it helpful, please consider subscribing. That's it. Hope you guys have a great rest of your day, and I'll be talking to you soon.